Hello and welcome to Double Entry Bookkeeping, Accruals and Prepayments. This is for AAT Level 3 students, a bookkeeping transaction group. They're good for all accountants. So what we're going to do today, well, we're still going from the general ledger to the financial statements. And what we're going to do is we're going to evaluate the impact of invoice accounting when we've got timing differences in our expenditure, when we actually receive the invoices versus when we actually use the expense. We're going to give a name to those timing differences, and we're going to create adjustments to the accounts for those differences. So, first of all, let's get down to the names. Prepayments are payments in advance. So we have not actually incurred the expense yet, but we've had to pay for it up front. Basically, that's called a prepayment. And we're going to do that first. And the reason why is because it's a very similar calculation to the first in, first out method for stock, which was in the last video. So they nicely flow together, really, doing first in, first out for stock and then doing prepayments thereafter. Invoices not yet received. So we've had actually incurred the activities taken place, really. We've incurred the expense, really, but we haven't received the invoice yet for it. That's called an accrual, where we're waiting for the invoice. So it's the opposite to prepayment. So we'll do that second after doing the prepayments first. So we've got our normal diagram now in terms of time here. We've got our two periods of time in here. Let's say they're years. And we've got our opening trial balance at the start of the first year, our closing trial balance at the start of the first year, and opening trial balance at the start of the second year, and our closing trial balance at the end of the third year. And we've got our statements of financial position, which are at these points in time. So that's our trial balances at these points in time, our assets minus liabilities equal equity. And we have our statement of financial performance over these periods of time. We're trying to get to our statement of these two sets of financial statements. So let's imagine what's happening in this one. So what we've had so far is, in the first year, we receive £100,000 worth of invoices for this expense. So we've received these invoices, and we receive £80,000 worth of invoices in the second year. In the first year, we've actually used £100,000 worth of this expense. Really, that was what it really related to. And so we really actually had £20,000 where we paid for the following year. So we paid in advance. So let's say we received an invoice here, but it was actually for, which, we're 2 months short of the year end, but it was actually for 5 months, and of that there was £20,000, which was related to the following year's expenditure. We've used £100,000 of expenditure in both years because we've received the invoices here of £80,000. We've got this £20,000 that we used, but we actually were invoiced for in the previous year. So what's happened then? Invoice accounting versus accruals accounting. In invoice accounting, we would account for the expense when we receive the invoice. So we would have £120,000 of expenses in year 1 and £80,000 of expenses in year 2. Now, under accruals accounting, we actually recognise the expense when it's actually incurred. So in year 1, we only used £100,000 worth of the expense. There was £20,000 which we paid for, which was related to the second year. So we only recognised £100,000 worth of the expense. The £20,000 that we paid for the second year, or we've included within our debtors for the second year, is an asset. That's an expense that we paid for next year. So that would be a debit in our prepayment, in our balance sheet, and we would credit out the expense. In year 2, we would have £100,000 of expense, and the reason why is because we would have the £80,000 worth of invoices that we received. But we would then also credit that prepayment, the £20,000, to clear it, and we would debit the expense with that £20,000. So that was how we would get to £100,000 here. So what we would do here, so we've got our invoices that we received, £120,000 here in year 1, £80,000 in year 2, and we go debit prepayment expense, or prepayments, £20,000, credit expense in the first year as our adjustment, and then in the second year we go credit prepayment, debit expense, £20,000, and then we also add that onto our £80,000 to get to our £100,000. So basically what we've done is a bit like stock, where we had this purchases invoices here, but we had this stock left over. Well, we've got this prepayment left over here. We take that off the expense for the year, but then it gets added to the next year's expense. So the cost of the expense in the year would be the opening prepayment, what we brought forward, plus any invoices in the year, less the closing prepayment, and that's going to be our expense. So how do we calculate this prepayment? Well, typically you're going to be given something in the exam which will say that the invoice has a date. So they'll give you the last invoice and it's going to have a date. Now what I would say here is very much don't try and work it out and be clever. Just simply write the number of months out. I'm going to give you an example of this at the end of this this video, where we're going to go through a bit like we normally do with a worked example. Here, so we're going to work out what's in the current year and what's in the next year. And the amount in the next year is going to be the prepayment. And then the opening prepayment is going to be always debited to the expense, regardless of whatever it is as well. The closing prepayment will be taken off the expense, and we've got the invoices that we received for the year. Now, what happens if the opening prepayment actually subsequently wasn't right, so it was inaccurate? It doesn't matter. We always debit the prepayment expense to the expenditure to the expense into the profit and loss account. Whatever the difference was is simply a charge in the year. More important actually when we get to accruals for that. So that's what we're going to do. We're going to have a working example at the end of this video, which will show this in more detail. So we got some accruals, and now we've got the same kind of time period here. So in this one, we've actually only received £80,000 worth of expense in the first year, and then in the second year we receive £180,000 worth of invoices. So we got the £80,000 worth of invoices that we receive in the first year. In the second year we receive £120,000 worth of invoices, but really we actually use £100,000 worth of invoice in the first year. We're waiting for £20,000 at the end of the year. And in the second year we use £100,000 worth of our expenses. So what we now have is we have this gap here, this £20,000 gap is actually a liability that we're just waiting for our invoices. So what happens? In invoice accounting we would have £80,000 worth of expense in the first year, £120,000 in the second year. In accruals accounting, we have the £100,000 of expense in the first year, because what we do is we go and credit an accrual. So we go credit accrual, credit a liability in the balance sheet, and we go debit the expense. So we're crediting the liability because we've got a liability, a money out item that's going to be incurred in the future. So that we credit in there though. That is then an increased expense, less money out to the shareholder, so a debit the expense in there for that amount, and that then adjusts the expense to £100,000. In the second year, although we receive £100,000 worth of invoices, the first item that we do is debit the accrual and credit the expense. So that would reverse out that opening accrual in the second year, and therefore reduce that expense in the second year, in this instance, to £100,000. So accruals accounting is actually what happened rather than only what is invoiced. So how is the cost of expense then? So the expense is the closing accrual, which is added on. So we go debit the accrual, credit the expense. So closing accrual, which would be debit the expense, credit the accrual, and then plus all the invoices during the year, and then we would take off the opening accrual comes through. So we would go debit the accrual, credit the expense, and so that would be the cost of our expense when we got an accrual. So in terms of calculating our accruals, and again, typically in the last invoice you're going to see in the exam, it's going to have a date. So it's going to say it's for 5 months up to the 31st of up to the 30th of November, let's say, and there'd be 1 month then where we're missing, and we would take that invoice and we would divide it by the 5 months. So what you're going to do is you're going to work out what's in the current year and what's missing, and you're going to then use that last invoice to sort of factor up what is that missing amount worth, and the missing amount is the accrual. Now in the following period, the opening accrual is always credited to the expense, regardless of whether that opening accrual was accurate or not. A bit easier with prepayments. Prepayments are typically very accurate. Accruals can be a bit of a guess because you haven't received the invoice in. Now, both with the prepayments and the accruals, they might tell you that actually the prepayment or the accrual is a specific figure. If they do that and they give you the actual amounts in there, then all well and good, just use those figures rather than trying to factor it up. But typically I think you're going to be given an invoice and you're going to have to sort of factor up and work out what either the prepayment or the accrual is going to be. In accruals, because it is more of a guessing game, because you haven't got the actual invoice typically when you're preparing the accounts in a number of cases, or in some cases you've gone after the year and worked out exactly what it's going to be. Because it's a bit of a guessing game, if you get it wrong, that's just a charge in the following year. Okay, so when are those opening accruals and prepayments transferred in the following year? And they're actually transferred, so the sort of the debit accrual, credit expense, or the credit prepayment debit expense is made on the first day of the following period. So we account for it in our closing balance, but then in the first day of the following period, we reverse those journals out as well. That's the theoretically perfect answer. In reality, nobody does that. They adjust it at the end of their financial period that they're going to do. But we'll stay in the theoretical world here that we're going to do in our extended trial balance. And so, if you're asked a question, they're reversed on the first day of the following period. Now, probably they're thinking, well, this is a bit. What's the point of this, really? I mean, effectively, aren't accruals just missing trade creditors, and aren't prepayments really negative trade creditors? Why bother? Why have this separate name for them? Well, the point of double entry bookkeeping is to record cash movements in and out of the entity, and a lot of the reasons why we have different names for things is it gives you the timings of the cash movements. So accruals are going to take longer to be paid than trade creditors because you're going to have to get the invoice has to come in, and then we're going to process it, and then we're going to pay it. So actually, although accruals is still the same liability as a trade creditor, should, if the reader of accounts will be looking at it and going, well, actually, that's going to be paid later than trade creditor. Prepayments, they've already been paid, so they're not negative trade creditors. We've already paid these out. And why are they not then some form of debtor, let's say? Well, we can't get the money back. So if we decide that we're going to just not use this particular thing anymore, let's say we decided to cancel our phone contract or whatever it is there, though, then we're not going to get the full money back, if anything, really. So it gives you a bit of an idea about, well, is it worth as much as the trade creditor, really? So that's the reason why we have different names for them, is simply to tell the user of the accounts specific things in terms of the timings of the payments and simply their recoverability. So now what we're going to do is we're going to do some examples. We're going to use our question spreadsheet that we've been developing over the last few videos. You've got one of this in the example. I think I'll give you 9 different separate questions for prepayments and accruals as well, together with just a bit of a rehearsal or refresher over the stock adjustments as well. We've got now our spreadsheet in here, which you should be used to by now. And we've got down here then some more invoices which we're going to post during the year. And we've got an opening balance sheet. And it's interesting what we've got now here is some accruals and prepayments have appeared. And we've got to do some closing stock journals, okay, closing stock adjustments, and we've also got some year-end journals for prepayments and expenditure. Not told you which one. It's not told us which one it is there. We'll see how that appears. So first of all, then we'll do our journals. So make 115,204 sales for expense. Sales on credit, including VAT. So we're going to have debtors there, which will be the full amount because it's got the VAT figure in there. VAT comes off it, and the sales is the net figure. We receive an invoice in the purchase day book for telephone expenses, so creditors and telephone expenses for £6,400. It's given some information about timings here, but we don't need that at the moment because we're not doing the accruals yet or the payments yet. And the VAT is not payable. Ooh, okay, so that will be debit the telephone expenditure, credit creditors. Receive an invoice in the purchase day book for energy expenses for 9,120, including VAT, which is for 6 months. Okay, so don't need to worry about the prepayments or accruals yet. Includes VAT though. Okay, so that's a different figure there though. So we've got some VAT in here. So we've gone. Credit the creditors with the 9120, and the energy is the net of the VAT figure. And we've made £6,700 £67,000, or £67,200 of the purchase expenses in the purchase day book. So creditors, so debit purchases, creditors. We've got VAT as well in there, so that's going to be a credit of VAT one, and so that's what we've got there. Okay. We've got our opening balance sheet here. We've got some amounts, so we'll just turn those into our opening balance sheet in case we're asked that question there. And then we're going to take our opening balance sheet and our journals in the year, put those into our T accounts, which we've done over here, as if by magic. And then we're going to put those into our opening trial or draft trial balance, which you got here, and that balance is there. Now, what we'll see in our draft trial balance is we don't see this opening telephone accruals and this opening energy prepayment appearing in here. And what we'll see is that these are actually cleared off on the first day of the following financial period. So if our financial period, if that opening trial balance was the closing trial balance at the 31st of December 2018, On the 1st of January 2019, these accruals and prepayments were reversed. So there was a journal that was put in which went debit telephone accrual, credit telephone expense, and there was a journal that was put in that went credit energy prepayment and debit energy expense. So that must be in here somewhere. So there's the debit, the energy prepayment, which was the credit of the energy prepayment, and then debit energy expense, and there is the debit telephone accrual, credit telephone expense. That's the theoretically correct position, theoretically accurate position of how it should be posted. You may see it appear in a draft trial balance because in reality people don't tend to do that. They don't tend to move it in there. They tend to do it as a part of the period end journal. So you would unless you've set your accounts up to actually do that, sometimes the software system set up to automatically do it, you tend to see this actually sitting in the trial balance, and you reverse it in the adjustments. So you would go debit telephone accrual, credit telephone expense in the adjustment. The same for payments in terms of credit the energy prepayment in this instance, and debit the energy expense. So that's what we would have there. Right. Let's now get down to our year-end journals. So closing stock is 470 units, and it's calculated using first in, first out, rounded down to the nearest £100. Okay, so we've got first in, first out. We've got 470 units, so it's going to be the last units that we have. So we look back at our invoices here. We've got 700 units here, so that's more than this 470. So that's the invoice that we're going to use for our value, and it's £80 each. Now you just have to be careful here in terms of you may sort of see. Closing stocks of purchases. Sorry, not that. Let's go for closing inventory in the statement of financial position, and the closing inventory in the statement of profit and loss. So you may see something where it sort of says first in, first out requires it to be physically the last items. It's not. First in, first out, or average cost, or any of them are always just assumptions. These 470 units could actually be 400 units in here and 400 of the opening stock, or 70 of the opening stock to get to that 470. It doesn't really need to there. If you're seeing the word physically appearing in a question on closing stock, then you know that something's up and you're about to try. There's something going to be trying to trick you. Remember, the actual calculation is simply an assumption. So we've gone. Debit our asset, 37,600, and the 470 items times by £80, and credit our closing inventory in the statement of profit and loss. Yeah, so those are our two items here in our adjustments column. There, and that's our first one out of the way. Calculate the year-end journal for energy expenditure. So we're going to calculate our energy expenditure year-end journal. Let's have a look at what happens here. So we've got the energy expenditure instruction here, and the best way to do this is to just simply mark out the time. So it says for 6 months of the year up to the 31st of March 2020, and the financial year end runs to the 31st of December 2019. So all you do is you go 6 months, so 1, 2, 3, 4, 5, 6, and then we go when it's up to the 30, it says to the 31st of March 2020. So then we work back what these periods are. So February, January, December, November, and October. This is the point which is in the year, in here. So this is the amount that's outside of the year that we're going to adjust. So we're going to take off 3 months of the 6 months. Okay, so we've got a prepayment here. There's a prepayment, and it's an asset, so it's going to be whatever the amount was, the expenditure in this invoice was, should be here. Remember, it's the net expenditure, so the VAT is trying to trick us here, and we might have tried to get us to go for that figure, but it's not. It's the net expenditure times by the 3 months that it is, divided by the 6 months for the total period, and that is our energy prepayment. And we're going to take that off the energy expenses. It's going to be a reduction in the energy expense, which means more money that's available to go out to the shareholders in future, which means it's a credit. Okay, calculate the year-end journal for telephone expenditure here. Oh, actually, let's just put that in as well. There, so there's the prepayment there, and here's the energy credit there. Okay. Right, so now what do we have here? We receive an invoice in the purchase daybook for telephone expenditures for $6,400 for 8 months up to the 31st of October 2019. Okay, so again we just go over here. First of all, we just mark out our months that we have in this invoice. Then we put it's up to October 2019. We need to get to the end of the year. So how many months do we need to take it to get to the end of the year? 2 months in here. So the amount that we need to add on in this here is going to be a quarter, so 2/8 of this invoice. Now that's if they're saying use the invoice as the basis of calculation, and just sort of factor it up basically. So sorry, where was telephone, wasn't it? Let's find it. Telephone and accruals here. So we're going to add on this energy expenditure. So, and we've got this is the expenditures here. I'm going to times that by 2, divide it by 8, and so times it by the 2 months, divide it by the 8, and that's going to be a liability for the future. So it's a credit. So let's now, so it's debit our telephone and credit our accruals. Okay, so those are our adjustments, our year-end adjustments here. Now let's now move this over into our extended trial balance. So we've got our buildings and our car and our fixtures and fittings. Opening stock, remember, that's been paid off and that's put into the profit and loss account. Our debtors goes there, and our bank is there, petty cash is there, VAT, creditors, sales is in our profit and loss account. Yeah, the energy expense then is that plus, oh, we're going to take it off the adjustment, so we're taking off this, so it's the debit minus the credit. There, the purchases is that. Our telephone expenditure is going to be that, and we're going to add on that accrual. There, we got the shareholder capital, which is a balance sheet item. Our closing inventory in the statement of profit and loss is in the balance sheet there, and that in the statement of the profit and loss account is the credit there. The accruals is a balance sheet item. The prepayments is a balance sheet item. And then we've got our profit and loss account here. So which one's the bigger figure? 139,000 on the one hand. Okay, so we've made a loss. It's not very good, is it? Right, so we've made a loss. So that's going to go on the credit side in the profit and loss account to balance this account here. And so that's going to go on the debit side in the balance sheet when we close down these accounts. So when we go credit, opening stock, debit, the balance sheet profit and loss account. And so that is then our closing balance sheet. And in terms of our opening balance sheet, if we just want to do that then now, there's our buildings and our car and our fixtures and fittings. Our opening stock now is the closing stock. So that would be closing stock. Our prepayments then has now appeared in here, and our debtors is there. Our bank is here, petty cash. Our VAT is the creditor there. There's our accruals here, our creditor there, and shareholder capital, which is our shareholder capital, but minus this loss for the year. And there's our opening balance sheet in the future. That should just help you sort of see a few calculations then here, just in case you were just asked to do the calculation within the question. So the cost of sales is the opening inventory cost, which is that one, plus the purchase in the year. So that would be that figure, minus the closing inventory. So that was that figure there, and that gives us our cost of sales. The telephone expenses was the so we're going to add on the opening accrual for this one. So we had an opening accrual, didn't we? So oh, sorry, we take off the opening accrual. So that's going to be minus the opening accrual figure. So that we then add on the telephone expenses in the year, and so that will be what we got here. Let's just find it, 6,400 there. And we've got our closing accrual, which we add on. Here, our closing accrual, just that figure there. So that was our telephone expense, which you can also see here. So this figure here, this 5630 was the net, was those two combined there. And then we had our telephone expense in the year. And when we had our accrual to add on, and then our prepayments, and we'll add on the opening prepayment. That's we go credit opening prepayment, debit the expense. We've got the energy expense in the year, which is, we find it, 7,600, and we take off the closing prepayment, which was 3,800, and that gives us our energy expense for the year. And we can see that 4619 is the 4619 there. So that is prepayments and accruals. I'll do a whole series of these questions available for you in the link to the description. The link to the spreadsheet with all of these questions is in the description. There'll be some with stock with first in first out, some with average based out. There'll be things where they'll be mixing around with the VAT. Have fun. Hope you enjoy it. Thanks a lot. Thanks for listening. Bye bye.